Well, the prop firm is not evaluating your strategy. Instead, they are evaluating you as a trader. And that being said, welcome to today's video. My name is Rocky Calvin, and I want us to dive deeper into the prop firm secrets and how you can be able to maneuver around and become, beat them at their own game. So, first thing first, I want us to crack the real secrets behind, prop firm success. This beyond win rate is just it's not just about how much you win or your win rate. It is way beyond that. Okay, so many traders do believe that to pass a prop firm challenge, all you need is a higher win rate, which is okay, and then they obsess having a 80 to maybe 90% winning trades. But the truth is that pro firm don't really care about how many trades you win. They only care about how you manage risk and capital, and that is where the secret is. Because I want us today to go beyond the surface, and expose the deeper secrets, that separate funded traders and the dreamers. And me speaking this, I'm speaking from a point of being I've lost account, a lot of accounts, and I've also been funded multiple times. So I have both the experience when it comes to prop firm trading. So let's talk about the win rate myth. I call it a myth because there's just something fishy about it, like fishy about it. So a 70% win rate means nothing, if you're losing trades, just wipe all of your gains. And also a 30% win rate can still make you profitable if your wins are bigger than your losses. So the pro firm will just evaluate your consistency, not your luck in streaks, because there's also luck in trading. There's some scenario whereby luck can play part in. And the secret to this is now focus on the risk to reward. Not win rate, just focus on the risk to reward. For example, a 1 to 3 risk to reward, a 1 to 3, 1 to 3 RR. I should have used the colon in there, but I think you guys saw in my previous video. I'm using a laptop. This keyboard is still in Spanish, so I've not yet worked on that, and it's no big deal. So a 1 to 3 RR with just 40% accuracy can outperform a trader who has a 70% win rate with 1 to 1 R. So if a trader, for example, they have a very high win rate in their strategy, for example, they have a 70% win rate, but their returns, risk to reward ratio, is just 1 to 1. Believe me or not, a trader who just only have 40%, nearly just half of what the high win rate trader has, can still beat the high win rate. So focus on the risk to reward ratio. In most scenarios, I usually prefer nothing less than 1 to 2. Now, let's now go to number 2. We've talked about the win rate myth. Now let's talk about number 2, which is now the risk per trade. Remember, number 1, we're talking about win rate. Then number 2, I want us to talk about risk per trade. So when you talk about risk per trade here, this is also another big factor that that often leads to actually blowing accounts. And this is, you see, the rules in prop firm business, they all evolve in all these things. They evolve in risk, they evolve in the win rate and psychological discipline and many more others I'm going to be talking about here. So when you talk about risk per trade, this is now the hidden lever. So most traders blow their challenges not because of bad strategies, but because they risk too much. Now, prop firms usually set a daily loss limit and overall a drawdown limit. And if you keep your risk small, for example, 0.5 to 1% per trade, you give yourself more room to survive the losing streaks, because the losing streaks are going to happen. Now, The secret that I'm going to give you, secret number 2, remember, secret number 1 I gave you is focus on risk to reward ratio. Have at least a risk to reward ratio which is not less than 1 to 2 R. Okay, just 1 to 2 R is more than enough. Now, secret number 2 I'm going to give you guys is passing a challenge isn't about hitting profit targets fast. It's about surviving long enough to reach them. Hitting them fast, depending on the market conditions. But you see, we cannot predict the market conditions. This is the only thing we can control is how we behave in the markets. Now, the secret is just surviving long enough to reach that profit target. And surviving long enough meaning that, you know, when you're in the military, or maybe you're a sniper, or maybe you've given a position to, you know, protect maybe your fellow militants and so on, and you're a sniper, the first thing you're going to be doing is to ensure that your bullets are not misused. You just don't go over there and just, you know, pulling the trigger all over to anybody that you know. You must ensure that wherever you're targeting is the enemy, and you target the enemy in the right. Okay, let me not go there. But whatever I'm talking about here, I hope you guys are getting my point. The capital is your bullets. That's where your life depends on. That's where the life of that account depends on. If you misuse it, and you know, sometimes when misusing it, you won't even know that you're misusing it. That's where the rules come in. You need to have a checklist. You need to have rules that you can't compromise. If it is 2% risk per day, and you've reached the 2%, even no matter how good the setup is going to come up, you just walk away from it. That is now where the discipline now comes in, and leads us to the third factor, which is the psychological discipline. Now, pro firms, they often test psychology more than strategy, by the way. It's only that most people think that, you know, if I have a better strategy, if I know this strategy, then it's going to be, you know, working. In this channel, I give you guys a strategy whereby you can be able to make, you know, 1 to 8 or maybe 1 to 5, or like it's a good strategy, but it also, like just like any other strategy, is not 100%. Yes, you can have at least 50% win rate. 50% win rate with over 1 to 4 R. Like, what's your excuse? It's over here. Go take a look. There's a video I did about this, like how to pass your pro firm challenge on. They're all in this channel. So when talk about psychological discipline, traders often break the rules, you know, after a loss, and you know, they start by chasing trades, doubling risk, you know, to get it back. And there's actually, you know, the tilt thing. You hear people talking about tilting. Eh? So that's exactly what pro firms want to see. And the question is, can you stay disciplined under pressure when you're losing? Can you just sit on your hands and just let it go? So you see, all the rules in the pro firms, for example, the consistency, the maximum drawdown, daily drawdown, all these rules, they are there to test you. They're not really testing your strategy, by the way. If you think they're testing if you are a profitable, you know, you have a profitable strategy, then you have to think twice. They're testing you as a person. And in some video back, I told you guys that trading is just gonna expose your darker side of yourself, the inner dark side of yourself that the surface don't see, the one that often gets angry whenever you lose, the one that often wants to revenge, the one that can't accept a loss. You see, the one that don't follow rules, the one that can't keep up with, you know, consistency. So trading is just gonna be, you know, exposing that. Now, the fourth factor that we're gonna be talking about here is now compounding the small wins. Compounding is a very actually, even in the Bible, is a very, very important factor, because even in the Bible, I think there's somewhere read whereby, I think it was in Proverbs or Psalms. Sometimes I read the Bible, and it's a very great book, to be honest. Very great book with a lot of wisdom. Even with the trading, actually, there's a lot of wisdom that can help us in trading from that book. So you don't need a home run trade. You know, many funded traders hit the target with consistent small gains rather than big risky bets. So, for example, you risk, or you make, let's say, 0.5 per day for 20 days. That is 10% achieved. So you can say that every month I only want to make 10% returns every single month consistently, and that is easy When your growth is just gonna be 0.5 growth, imagine profit you're making is just 0. Not even 1, 0.5. Then after every 20 days, you have 10%. If you have, for example, a 100K account, and 10% of a 100K account, that is $10,000. So you can be making $10,000 after every single 20 days. If you just like, there's not that big, you want to make it all big, you just go 0.5. Once you get it, you walk away. But imagine when for example, you have a strategy whereby you can be able to make at least 1 to 2 hours, and you only take A plus setups, you don't just take random trades. 10% is too little. Literally, you're going to be ending up with at least maybe 20% or 25% after those 20 days. So let me give you the secret now to number 4 about the power of compounding small wins. Now, prop firm trading is a marathon of patience and, not a sprint to profits. You just have to be patient well enough and, compound the little wins, compound them, then that consistency leads to now bigger profits. Now, number 5, I want us to talk about the risk of ruin awareness. Now, every trader has risk of ruin. The probability of blowing account before reaching the goal, and pro firm traders lower this by keeping risk consistent, avoiding over trading, and accepting losses as part of the game. Accepting losses is a very important factor because nothing is perfect. Even these markets, they're not perfect. Because you see, for example, this is a gold chart. The price action in gold and Nasdaq recently this week has not been the top. It has not been really, really good, actually. It has not been good at all. Because you see, for example, in 1 minute, we're dipping down. After that, we gapping up again. So it has been up and down move, and it's not really been good. So in these such scenarios, as a trader, you have to understand that losses are part of the game if they happen, and also not every day is a trading day. So secret number 5 is going to be, founder traders don't think how much I can make today. They think, how do I protect my account today? How can you protect your account today? You have to start thinking like a profitable pro firm trader. Protecting your account simply means that you don't take stupid trades. If you can't read the price, you walk away. Just as simple as such. As much as I say it's simple, but I know it's hard, especially when you're still beginning. But you have to keep on trying. You have to keep on doing that. Okay. Now, to conclude this topic for today of the pro firm secrets, to survive and thrive in pro firms, remember that win rate is overrated. Risk management are psychology, and psychology are always king. They're always king. They always come first, not win rate. Now, smaller consistent gains now will beat the reckless big wins. Now, the real test is discipline under pressure. That is where the real test is. When you have the pressure of passing that pro firm account, you have the pressure of getting payout, when you have the pressure of maybe social media, you're seeing other traders posting their payouts and so on. So you have that pressure, and you also have the pressure of you're on a losing streak. Now the real test is discipline under that pressure, not your strategy, not anything else. It's you as a trader who is being tested here. That being said, guys, this will make the end of today's topic about pro firm secrets. This is how you can navigate with whatever I've discussed about here. You can navigate the pro firm space and be able to beat them at their own game. And that being said, hope to see you in the next one. Cheers.